Although ARM Holdings is older than Nvidia, having been founded at 1990, the stock only got reissued in September of this year, and it's been a little bit bumpy out of the gate. ARM got its start developing powerful processors for mobile phones. Since mobile phones run on batteries and they're handheld, ARM had to figure out ways to develop powerful processors that could use very little power and generate very little heat. As a result, ARM's processors have become very useful in data center environments, where it's not the CPU that's responsible for the majority of the calculations, but the GPU. So as a solution, what you would want would be low power, high output processors that develop really little heat. And that's exactly what ARM develops. Recently, ARM teamed up with Nvidia to produce their artificial intelligence Grace Hopper superchip. And as part of that chip, 72 of ARM's processors will be used in each superchip. This is an indication of the kind of strength that ARM could bring in its future. As long as it maintains its innovation and keeps developing more and more powerful processors, it'll probably be a winner in the artificial intelligence space. However, it's important to remember that at this time, ARM does not have any AI chips of its own. It is developing CPUs in AI solutions, but there are no AI chips coming from ARM. Additionally, this stock is very overvalued, with a lot of analysts incredibly optimistic about the outlook for ARM, but it hasn't proved anything yet. Now that being said, I was an investor in ARM before it went private when SoftBank bought it, so I do believe in this company for the long term, but you always need to keep those weaknesses in mind whenever you start a long-term investment. When it comes to a new stock, even one that's a reissue like ARM, I like to give it a bit of time so that it can develop some price action. ARM has demonstrated that there is some support around the $50 mark. So after I originally opened my position on September 14th with an average buy price of $57.28, I decided to add right above that $50 mark. My buy order went through on October 13th, adding 5.87% to my position at $50.44 a share. You may notice that when combined with my original buy that took place on the day of its IPO, I still don't even have a 20% allocation in ARM. And that's because I'm very careful when it comes to IPOs. I bought Facebook when it came public on May 14th of 2012 at $42.05. And over the next 4 months, Facebook crashed more than 58%, down to $17.55, its all-time low at September of 2012. Of course, there are no guarantees that that's a direct correlation to ARM, but you need to keep that kind of thing in mind regardless of what kind of new investment you're getting into. I'd rather buy in stages on its way down and buy at lower prices. If it ends up going higher, I don't have any problem raising my cost basis, but we have very little price action to go on right now. My buy order lowered my per share cost 3.98%, down from $57.28 to $55 even. From here, my next buy target is at $47.60, which is a little bit below what analysts are targeting, which is $48. The way I came up with this buy target was to use Fibonacci retracement. The way Fibonacci retracement works is you draw from the low of a move to the high of the move, and it generates levels that are calculated using the Fibonacci method. When you zoom out on the chart, you can see that this gives us additional buy targets, with a key level of support down here at $47.96, which is right where analysts think ARM might be headed. But if you draw another Fibonacci retracement from its recent low to its recent high, you can see we get another level of support at $47.38. So in my calculations, I decided to split the difference, which gave me that buy price at $47.60. Since we do now have some price action for ARM, where it reached its high at $69, its current all-time high, that will be my next sell target, where I will start taking profits in this position.